next week. But today we have the dividend investor on. The dividend investor, he's a CPA. He's a Canadian investor, avid fan of Costco stock. Welcome in. Happy to have you on.
Hey, Ryan, thanks for having me. Hope you guys can hear me okay. Hello, Fiscal. I don't think we've had the pleasure, but nice to meet you as well.
This is exciting. This is one of the initial guests that I've been really excited to ask, more about the Canadian side of, investing, because that's somewhere, I have a few questions personally that we're going to get into tonight. And we also want to let everybody get in here. We have a bunch of preloaded comments, but Dave, would you like to introduce yourself to anybody who may not know your channel? Plug anything you need to now.
I'll do my best not to plug. That's not the goal of my channel, as you know. But basically, I'm a CPA here in Canada. And for those that don't know, that's a chartered professional accountant. And again, my background here and my channel, I've been in the accounting world for the past almost 15 years. I've seen a lot of experience in terms of auditing, analyzing different companies, analyzing different stocks, looking at how businesses work. And I try to show that on my channel, but in a viewable and educational way. So that's basically my channel. The whole goal of my channel, like Ryan, and possibly you, Fiscal, I just want to educate people. This is just a platform for me to help other investors and share what I've learned on my investing journey. So we basically look at high quality stocks and we try to follow them over their long-term business cycle and invest in opportunistic opportunities.
I like that. There's nothing. How long? Well, would you like to start? Like, when did you begin investing? How did you kind of get interested in it? And when did you really start getting? I call it the dividend investor addiction. You get that first dividend payment, you get that dopamine hit, you get excited.
Yeah, for sure. My investing journey is actually pretty funny. I wasn't focusing on dividends because when I first started investing, I really knew nothing. I was throwing darts at a board just like everybody in Canada. I'm not sure if you guys saw that initial weed stock rush, but I was a big part of that. I was in a couple private placements. I got to capitalize on that, taking some companies IPO, investing in their initial seed rounds. So we had a bunch of companies like Aurora Cannabis, Canopy Growth, T-God, a couple of these ones. So I just by luck, 10x my money on a couple of those ones and then got out before legalization. And then I started to really peel back the layers of investing and found out that I was really gambling. So that was just gambling. I might as well have gone down to the casino and rolled a couple pair of dice. That's basically what happened. I just got lucky. And then I started getting those dividends. And once that first dividend payment came in, just like you said, it was a couple of cents and then it came to a couple of dollars, and it kept building and building. And that was the real addiction to dividend investing. Just like, Ryan and Fiscal, when you get that dividend payment for essentially doing nothing, it feels really good.
It's one of the, you always hear that free money argument. You always hear, when people are, they're obviously, dividends, like tax wise, obviously there's a deficit and all that. But I still think the factor of having your shares manually reinvest, getting, that passive income, you don't have to work for it, and having your money earn money, compound interest, all that good stuff.
Yeah. And, people may have their say one way or the other about how they feel about dividends, but I don't view it as any different than if you bought a rental property and rented it out and got that monthly cash flow from it. It's passive income. In fact, the dividends are way more passive than the rental income in most cases, I would say.
Absolutely.
Yeah, agreed, Fiscal. The other point is when we say passive, if we're actually researching companies and doing that, that's work too. So we are putting in work to get that income. Those dividends, even though they're passive income, we're still doing the initial research. That's time. We have a value per our own time of money, which you could be doing otherwise or other activities to generate additional income. But we're investing. So I guess you could say it's passive. Maybe it's not. It's always up for debate.
Yeah. All right, we got a first question in here from Eric, and he asks, "Does the dividend investor believe that MPW?"
No.
We're saying MPW as many times as we can for the algorithm, right?
We are. That's a true fact.
Sorry to interrupt. MPW, but no.
Yes, I personally agree. I don't know if Fiscal would, but we all have our this is what I love
No,
about our channel.
I'll categorically disagree, but that's all right.
This is what I love about our channel. We have different perspectives, different ages, different opinions on stocks, and that's what makes investing. You know, I think that's the great thing about it. But I have a question. I want to talk about Canadian bank stocks. So we've talked a lot about this in the comment section over the last couple of months.
For sure, for sure.
So Canadian bank stocks, I understand the monopolistic argument, but when you look at their performance, a lot of it's like it's kind of trading flat. I'll pull up a chart here of just TD for an example. It's just kind of flat. I do understand like that's like the one thing that's kind of halted me potentially starting a position. Like I understand it is very monopolistic along with the 5 or 6 other Canadian banks you said, but like if it's so my thing is just I see a lot of like it trading flat with a 5 or 6% dividend yield, and that doesn't for me like scream like Costco kind of like you know what I mean, just that kind of like compounder stock.
Yeah, for sure, 100%. And yeah, while you're pulling up that chart, I'll give some context. So with banks, like you said, we have the monopolistic ones, and for your viewers, I'll reiterate, we have the big five, or I guess you could call them six now. We have TD Bank, that's the second largest, the first largest being Royal Bank, RY. Then we have Bank of Nova Scotia, CIBC or Canadian Imperial Commerce Bank, Bank of Montreal. Those have been the traditional five largest monopolistic banks. And then the smaller, more Quebec player here, that's been National Bank or NA. So yeah, so like you see on that chart, Brian's pulled up Royal Bank. So that right there is our largest bank by market capitalization. They are monopolistic, but like you said, looking at the returns, there are time periods where they're flat. The key with these banks is buying them at very attractive valuations. When you buy them at that attractive valuation or that dip when that happens, that's really the time frame that's most relevant for you. Now, a lot of people they like dollar cost averaging and they build up their position over time, but it depends on what time period you're looking at. So I can totally concede and agree with you there. When you're looking at it on a specific time period, it might show up as flat, but it depends on which time period you invested. Now, again, like you said, compared to Costco, Costco is just a totally different business.
Yeah,
That thing is
definitely.
just
Yeah.
that's just a monster. That's just going to keep growing and growing, and the valuation on that, you're paying over a 40 multiple compared to the banks, which traditionally
Yeah.
trade at 9 or 10 or 12 times. So
Yeah.
it's more of that valuation, but I do agree with you, and that's why a large percentage of my portfolio is not just in those banks.
Yeah. When do you think would be like when was the last opportunistic time do you think to buy into these banks? I'll pull up the chart. I'll pull up the chart again once here to kind of give context.
For sure. Like anytime you have those crashes, like that 2008, 2009, again, anything you could have hit a dart on any board for the past 10 years and made money regardless. But any of those times, you would be seeing large gains. And again, when you see these interests, it's always a little tricky with the banks. You want to try to buy them when they're trading close to their book value, so their
Mhm.
actual asset value. And that again can be hard to time because a lot of times, if they're big banks and you got to pay up for that mode, they're trading higher than that specific book value a lot of the time. So it's
Mhm.
always comes down to that. Oh, hey
Yeah.
Ashton, hope you're doing well.
Yep. We got Ashton in the chat. He's a big fan. Mentions. I would just, yeah. I mean, like, I don't want to say, but there's like companies, for my time horizon, at least like 40, 50, 60 years, where I feel like any time is a good buy. Like, kind of an example, Visa, Costco, those kind of things. So I can understand though, where you want to potentially time. It's almost like oil as well. If you would have bought like some of the oil giants back in like 2020 or whenever the last crashes where you'd have crazy returns, but then you pull up the last few years and it's just like kind of flat. So I definitely do see your point there, and I didn't know. So thank you for
Yeah,
the clarification.
no worries. Yeah, and like you said, it's all in your time horizon. That's probably one of your largest, if not the largest consideration, is looking at your time horizon. For me, 10 to 15 years, I could possibly be living off these dividends. I do want a portion of my portfolio to be in kind of steady eddies that I know
Yeah.
might underperform by 1% or 2, but I would be willing to pay for that underperformance, just for that safety net. So
Yeah, that trade-off has definitely been a topic of conversation, I think, recently. The trade-off of like stability and less volatility between like total returns compared to the S&P 500 or whatever. It's real. It truly is like situation to situation for different types of investors. But do you currently reinvest your dividends?
I do. So
Nice.
the amount of dividends that I get, again, for people who haven't watched my channel, I don't share my total portfolio value of all my portfolios on my channel. It's roughly about 20 to 30%, depending on what the market value is. So
Mhm.
I really only show a smaller portfolio on my channel. So for that portfolio, I do reinvest all the dividends. And
Nice.
then for the other portfolios, they are mostly reinvested, but I do save some cash on the side, depending on where we are in the business cycle.
Nice.
Is there any specific like percentage you try to keep in cash at any given time?
Yeah, so like Ryan's been doing, I've kind of been building up my cash position. So as the gains have been nice, I have this over tendency to buy. And I think a lot of people have that tendency as well. Again, if you're averaging in and you're buying ETFs, that's a different story. You don't have the time to look at individual holdings. But I do have a plan to keep about 10% of my portfolio in cash. Roughly right now it's closer to about 7. So I have been building up that cash position. And I do want to keep that around 10 and possibly 15 if I can. So
I
Yeah,
could
I've got like
definitely
8 or 9% too.
I can definitely relate on wanting to buy stocks whenever stocks go up still. Even more when they go down. But we did also have a few questions from our Discord, which, if you guys didn't know, we post out a community forum a few days before to ask any questions, and we'll cover them in the chat. So I Shorty asked the first question, and he asked, as a Canadian, and I'm assuming this is directed towards you, Dave, but he asked CP or CNI, Railroad Giants.
yeah, so on my videos, I made or on my channel, I made videos on CP, less so on CNI or CNR, the tickers on the American and the US exchange, or American and the Canadian exchanges. But they're both great companies. Like, railroads are monopolistic, oligopolistic, whatever you want to call them. I don't see them going away for the foreseeable future. They're going to be here. They're very efficient. Now, the difference between CP and CNR or CNI is they did get that approval for Kansas City Railway. So now they have that railway which they can then earn synergies on in terms of their track. But CNR was still technically larger and has a larger presence in Canada. Again, valuation wise, CP is on the higher end. You're paying for that growth. CNR is a lower valuation. But in my opinion, I hold both. I have a larger allocation to CP because I have a longer time frame. But again, if you held 50-50 for CNR or CNI and CP, that's a great approach as well. Even if you have more CNI than CP, that's also a great approach. They're both great businesses. And if you're looking for having one of those very portfolio resistant stocks, those two are really key in my opinion. And the Canadian railways, again, not nothing to bash the US in it.
There's Union Pacific exists, too.
Yeah, nothing against the US, like Union Pacific or NCS or Norfolk Southern or any of those other ones. The Canadian ones are just run better. They're run better. When you look at their safety scores, they're way higher. They have a lot more safety measures or controls in place, cameras on tracks. They monitor those very closely. So when you have higher investments into safety, that should equate to less accidents, less negative news,
Mhm.
less financial settlements, etc. So that for that reason, I would argue that you own both.
So has that reflected in the financials? Has it really differentiated so far when you compare the both? I could pull up CP versus UNP, but I'm sure there's countless examples.
Yeah. UNP, again, you can compare CP and UNP. I would possibly argue to compare CNR or CNI and UNP, but basically it has translated to less accidents, and you can see it. And when you look at the investments made, you'll really see that. And like UNP is great. It's a great company. It's just not up to the standard of the Canadian railways.
While we're also on the topic of Canada, I recently ran a poll today that was, how confident or does the Canadian government basically kind of scare your confidence away from investing into some of these Canadian companies? Because from the US perspective, and I don't know if this is the same inside of Canada, it seems like the government is not the most loved by the people of Canada right now. I don't know if that's just from an outside perspective, but I haven't been like seeing great press on it. So from somebody who's actually in Canada, is there like any truth to that actually? Or, do you think that like the government in Canada, like, do you think that actually could have an impact on some companies?
Yeah. There, the Canadian economy, like you said in the press, we don't have much love for our leaders at the moment. I'll say that as politically correct as I can,
We'll get
but
canceled.
but when they're trying to take down our news outlets from providing us news off of Google, they're trying to do those type of things, enforce Google to pay our Canadian news outlets so we can access news on the internet. I don't know if you guys saw that. So there's a lot of things happening, and Canada just loves its monopolies. So they let these large companies like the railways, for example, or even our telecom services, like you have so many more options in the United States from who you can buy your cell phone. We literally have three or four, and
That's
they run.
crazy.
Yeah, it's Rogers, it's Telus. We have Bell. Like there's not much competition here in Canada because of those stringent regulations. So it's a little more of a tug and pull here in
Hmm.
Canada. But in terms of investing, it can be good and bad, right? Like you have monopolies. Those companies are going to control everything. On an investment side, that can be good, but as a consumer, you're kind of losing on that side. So I would say there's nothing really that's going to change my investment thesis on Canada. We have a resource rich company. We are going to continue to produce economic output, but in terms of future growth, I do see it stagnating behind the US. So I do have a mix of US and Canadian equities, and I try
Nice.
to keep it pretty balanced just because Canada's, again, a lower growth story, in my opinion. I think it's analogous or a little bit higher than the Europe market, but US really is where the growth is going to come from.
All right. We only have you for a few more minutes here. So I want to jam these questions in. We got Matt who asks us all a question, which is what is the largest dividend that we've all received? I'll start. I got a $22 dividend from SCHD, none other. Fiscal.
Nice. Let me think here. I think it was, I want to say like $260 or something before the MPW dividend cut. I think might have been the biggest.
Wow. Yeah, mine was from TD Bank. I think it was a couple $100.
Nice.
Yeah. So still in that building stage and reinvesting for growth. So
It gets exciting though when you start getting like you start comparing with your dividends what you could buy with them. And then that's when it gets exciting. And then lastly, Matt asks what dividend stocks at the top of our watch lists. I think this is a question mainly for Dave, but I guess we all want to answer it. Home Depot for me.
nice.
Probably Discover Financial for me.
Nice. I would say I have two. You're not gonna be surprised. One is a bank. That's Equitable Bank, EQ Bank. You guys can search that up, or your viewers. It's actually beaten all the banks, including JP Morgan and Bank of America, in terms of total return over the past, I think, 15-year period. It's produced about 16% a year,
What's
and
the
that
ticker?
it's EQB on the TSX. So when you look that up, it's an online bank, so they don't have overhead of any branches. Everything is done online only, and they give out loans for multi units. They invest heavily and provide loans for tenant properties. So when you look at EQB over the past, over a longer time period, you'll see it's gone up quite tremendously.
That's crazy price action for a bank, I'll be honest.
Yeah. You again, it's all price movement and your valuation. And the other one I would say would be to look at is ATD, Alimentation Couche-Tard. I don't know if you've heard of that one, but sorry, ATD, D as in Dave.
Christ, nope, I don't want my Google. ATDs.
Now, if you look at it on a max, this is a convenience store operator. They are a serial
Whew.
acquirer, and they are one of the best growth stories I've ever seen in my life. So,
Oh my lord, talk about consistency.
yeah, they
This is
just
like Costco
produce
stuff.
cash flow, and they just continue acquiring small mom and pop convenience stores, and then they turn them into their own brand, and then they just operate them efficiently. So these are two other ones I suggest you guys look out for.
We will. All right, Dave. It was a pleasure having you on. We were about the 20-minute mark. We got all your time expired, but it was an absolute pleasure. Once again, if you'd like to plug anything, and if you don't want to plug anything, talk about how great Costco is for the next 20 seconds.
Oh, to Charlie, Costco is my top performing stock. So that it is right there, up 60%. But thank you, Ryan. Thank you, Fiscal. If you guys want to check out my channel, it's at the Dividend Investor CPA on YouTube. And I'll see you guys in the next one. Thanks for having me. Appreciate it.
What a